Edge, the channel for learning about trading and investing. Welcome to a brand new episode of Markets Tomorrow, the daily stock market technical analysis show where we look at what happened in the market in the charts and then how we can plan for a better trade for the next day. And this is analysis for May 31st, Tuesday, tomorrow, the last day of the month, 2022. Right, and we had a bullish day, right? That's the third green candle that we saw today. Whether there was a gap that happened in the markets, and the IT sector took the lead after a long correction that had happened in the sector. Right? Will it sustain? Let's explore and see whether it will sustain. Right. So as usual, the pre-market analysis for May 31st, Tuesday 2022 would be based on all these parameters that you see on the screen, and we'll have some data analysis as well. We'll wrap up with some actionables. We'll have look at the global commodities as well. Right? All of this to come in the charts. Let's get into the charts and see what happens. Look at the gap up. So every time there is a gap up and a green close happens, it's a bullish kicker, professional gap. Right? That's the same thing that is seen, right? Although some of the points was given back to the market in the Banknifty, but pro gap is very bullish. Right? It indicates clear bullishness evident, right? Professional gaps, right? And this is the third day. Look at this candle wick size. It's a hammer pattern. Hammer at the end of a trend usually indicates reversal of the trend, and that's exactly what seems to have happened. It is a reversal from the trend and it has moved up, and there is a resistance here which is not cleared in Banknifty till last Friday, and today that is cleared. 16,400 kind of levels. There was a resistance that's cleared, and Banknifty had already cleared a resistance that was there here and now heading up. Right. You see a red because it could not sustain the gap up. It gave up some of the profits and pulled a little, but still closed above the previous day's high. Right. That's for a second day. This is what happened. Right, gapped up 1%, then gained another 4%, and then a little bit it gave back. Banknifty gapped up 1% and then could not sustain the resistance that zone at 36,000, and then gave up half of what it had gained the gap up and managed to close at that nearly 0.5% of gain. So it's nearly 2% of gain, 309 points gained in the Nifty, and 0.5% gain, 0.60 percentage, 214 points gained in the Banknifty. That's what happened. So bullish candle and a red candle in the small body red candle because it gave up after the gap up. That's exactly what happened. The banks are kind of not trending after the gap up. It could not sustain. So it was not trending, but it was it gave back some of the profits. But Nifty was non-stoppable, and it was the third bullish day that you are seeing. It's a gap up, bullish pro gap is what you see on both the candles. But just keep in mind that we are still in a downtrending channel. If you look at that, we have the moving average confluence resistance on the upside on both the indices. It's not cleared, but Banknifty has managed to close above the 50 DMA. So moving average closing, and then there is a gap resistance, another one that's coming on 32,500 levels, and then 37,500 levels and 17,500 levels. So these two gap resistance and the confluence of 200 DMA, 100 DMA, and 50 DMA. If that is also closed, then we can say some long stories there, right? And until then, we still, there's still a possibility that we make another swing low, another swing high, lower high pattern, and then it could again make another lower low. So that kind of things are possible. So still a very bullish third day that you are seeing the indices. Policy bands are showing that it is closed above and bounced up from the 20 DMA also. Bounce up and up move on 20 DMA indicates that probably the down move is arrested and the bottom has formed for the short term at least, and there's a consolidation that you can clearly see with the bands bending. Instead of going down, the expansion has now turned into a contraction, which means price action in the short term would be sideways, right, with some bullish bias because it's price is above the median 20 moving average, right? That's what the short term Bollinger Bands indicates. Look at the support resistance zones. Now the immediate support first would be at 16,550, 650 that levels, and the first resistance to take out would be 16,700, 16,750, and then 16,800, 16,900, Fibonacci 38, and then 17,000 rounding number, 17,000. And above that you have the resistance that begins at 17,300 levels, and 17,400 above and near to 17,500 zones would have the class and that gap resistance cleared. Downside similarly, the support first if 1600 is 16354 is is gone, means comes back 16100, 16200 level, and then 15850, 15950 is a 61 retracement level. If that gives up, then 15450 is the previous swing low. That's the support on the downside. Similarly, Banknifty, if you see, the first support would be seen at 35 600 900, that zone. If that breaks down from there, 35,000 Fibonacci 50 retracement level is what we have to look at. 34 350, 34 750 down after that. Then you have 33 600 and 34,100. That's Fibonacci 16 retracement levels. If that is given up, then you have 33,000 previous swing low, smaller swing low, and then if that breaks, it goes to 32,150, which is a previous swing low. That's how it goes. Right. Similarly, the upside, if the resistance of first resistance will be 36,300 to 36,800, Fibonacci 38 retracement, and then you have the gap that's closed at 37,500, and above that you have 38,000 and 38,500 previous swing high, and all that. It goes up like that, right? So these are all levels that has that has been marked. The only new thing that gets added up is the gaps that gets closed. So this gap is no longer there. That's done. Today it is closed and it's done with, right? Now we have two gaps up here at 17,500, 17,450 kind of levels, and then 37,500 kind of levels, right? So that's what we have to keep a close watch, but the major resistance will come in that place. Supports previous swing low first, and then so we are not gone much about that. So that's a major support on the downside, 15,650, right? Similarly, here it's going to be 32 100 150, that's on downside. Upside 37,500 above. So momentum, coming to that, momentum is sideways and continue to be sideways. It is not crossed into the bullish zones yet. Both the Nifty and the Banknifty. And if we are talking about the short-term momentum and the weekly momentum, also is sideways. If you look at the weekly charts, you can see momentum is sideways on both indices. So overall the momentum is sideways, but it's a rising momentum. That means it's anytime you can climb into the bullish zones, and it can turn out to be bullish, right? That's the way the momentum is rising. Trend indicators are showing that it's crossover has happened now on both indices, right? In the short term, it's across the DMI positive zones, it's bullish zones, but you can see that the strength is not that great because the green candle is still not rising up, but it's rising up in the Banknifty. Banknifty, the trend reversal has happened yesterday itself, and it's rising mode. And weekly charts, if you're seeing, it is still bearish, right? But it's in a falling strength, falling bearishness, and the crossover could happen. It may take time for the medium term turnover to happen, but trend in the short term has turned bullish is the biggest story today, right? So momentum and trend and price action we have seen. And moving on to volatility, we have seen that it's cool off. That's another big thing that has happened today, right? It is the first for a after a long time. The VIX, India VIX, the fear and greed volatility index has fallen below the 20, and it is 19.98. It's a 7% drop. But remember, we had almost every day. Last Friday, I believe it was 10% of fall that happened. So implied volatility of Nifty is 19, fallen to the 19 levels, and implied volatility percentage to 52-week calculation is come down from the 90 kind of percentage to 75.9 percentage. So it's a good call of crush of VIX has happened really, but remember that it is very close to the 20. So again spike back. So volatility is mean reverting nature, so it may find a bottom here and then it can bounce up. So that possibility is uncertainty is still there in the market, so please keep that in mind and caution unless it goes off below the 15 levels or something in the coming days, right? So that's very less than likely, but as long as it doesn't spike back to the 30 kind of levels, you should be okay. So VIX is cooled off. It's a big thing. Opportunities analysis for the next weekly expiry, that is June 2nd. Look at the charts. Overall, you can see that there is bullishness in the Nifty. The charts as of now, it's only Monday, so the highest call rating is what you see that is projecting outside both. So there is resistance is there definitely, but overall you can see the levels. There is some put writing that has happened today, right, on the Nifty especially, and some unwinding of the call. Also has happened. The Banknifty also unwinding of the calls has happened, but some amount of put writing also has put added. So levels, if you look at the highest put and call writing, is at 16,300 and 17,000, and 16,500 and 16,700 as the highest second level of put and call writing seen that levels. So Banknifty is 35,000 and 36,000, which the highest put and call writing is seen. After that, second highest put and call writing is seen at 34,000 and 36,500. And put call ratio is clearly indicating its bullishness. Both indices 1.27, it's very bullish. 0.93 is very close to the 1 mark, where slight dip is there, but it's almost bullish, you can say, the Banknifty also. And long will tip is the futures open this price action, that build up that happened, right? It's long. So bullishness is evident in the PCR and the put call ratio and the futures of OI, and some unwinding and adding up of put options are seen in the Nifty is also options operators also showing some bullishness, right? To make a lot of these levels, remember that these levels are only, it keeps changing as it closes to the closes near to the expiry. Look at the heat maps, green after a long while. Reliance has done well. The IT stocks are back. That's the main thing, right? The IT sector has been underperforming Lagarde since long, and only Kodak Bank, which was managing a good green for the last several weeks. Despite the market in the banks not performing, today the Kodak has given up some, and steel sector is also having some trouble. We'll look at that. So otherwise, across the sector heat map, if you see it's all sectors, the move was, the price action was, the up move was there, the rally was there, and all the sectors across the sector buying has happened today. Index heavyweights, if you see, you can see that after a good bounce up from breakout from that support zone from where it had slipped below, it is today there is some move and then some give back that has happened. Some profit booking has happened on both the indices, HDFC twins. And what is interesting to see that the momentum is rising and it has almost climbed to the bullish zone. So the case of HDFC, and HDFC Bank is just on the edge of getting into the bullish zones, right? So that's good price action and the momentum gain that has happened. Both the HDFC twins and Reliance has come back here after taking a pause of few days, and good green candle, and still in the sideways zone, and rising up momentum indicates that anytime it can get back to the bullish zones, and it has a potential move up to go to the all-time high again once again, right? Because it has retraced substantially during the correction phase. Infosys had, as you can see, there is a big correction there at 30% that has plus that has happened when the entire sector and Nasdaq was falling in today. It's a green day for the Infosys after a long time, and a bigger green day and momentum gain into the sideways zones for the TCS as well. Both the IT index performed well, Reliance has done well, and banks did bounce up but gave back. But as you see, also same thing happened, did bounce up and gained the momentum is almost to the bullish zones, and finally closed that. So banks had rallied up and then gapped up and then gave, some profit happened in all the bank indices. But the thing is, the Kodak Bank has did a big attempt to look at the candles. All majority of them are clean candles, and a very good support zone is there. And then it was trying to take the major resistance zone where from where it had slipped, weeks or months back, but it met with a resistance, and then it closed red today. And there may be a bullish divergence also that maybe have reverse divergence that maybe the RSI is taking support at 60 and then could again take some rest and then bounce back and break out this resistance. It's possible, but today it's a red day for the Kodak. Remember, the momentum is still bullish. Right, the momentum is much better than ICICI Bank and HDFC twins, as a matter of fact. But today was a red day for Kodak. So the banks did gap up and then gave back. Some of it, Reliance and IT stocks did well. That's the big heavyweights and the industrial sector performance analysis. If you see, it's a green day across sector buying has happened, and it's 4% nearly. IT come back, moved up. Metal rallied up 1%, auto 2% up. Pharma, it's only sector that flat, that closed flat. FMCG 1%, reality also 4%. So across sector move is what you see. And the main thing is that it's only the metal that remains short-term bearish. All the other sectors are turned into sideways or bullish. And what is bullish is FMCG, auto, right? And two sectors which just turned into bullish, where sectorial pickups of the stocks can be done. But if you want to be more confident, you'll have to wait for the catch-up of the weekly momentum also to climb into the bullish zones, which has not happened on FMCG and auto, but they, at least in the sideways, they turned into bullish. While the Nifty has turned into the sideways zones from the bearish zones. Right, on the short term, it's a big thing that has happened today. So sideways momentum is where IT and pharma, both of which has fallen into the bearish zones earlier. Right? And reality also has climbed up with a 4% up move. That's a big move that has happened. Right, 4% IT and 4% reality. So some switch over to the sideways has happened. So basically, you just need to worry about metal as of now. and some bets can be made on auto and the FMCG is what you see. So that's the sectoral performance that you see. Look at the buying that has happened in 30th May today. The Fyers have finally bought 500 crores of stocks in the cash, and that's happening after a very long time. So April 28th or something, so almost more than 1 month since green in the cash buying has happened in the FIS side, and DIS as usual has been buying consistently. So this is a good thing if it's going to sustain at least some amount of buying is probably happened for the FI. Probably they bought the beaten down 80 sector today, and that given the fact that the Nasdaq and all US index were bouncing up. So that's positive to see some greenery there, but hope it sustains. Now currency is consolidating in rupees weekend peak levels today. Some cool off is seen, but still it is above 77.5 and momentum is slipped and remaining there in the sideways flat. But the big thing that you notice is the US dollar index has cooled off substantially, and it is indicating that it may fall back to the 99 kind of levels, right? Remember, it had made a 17-year breakout high before cooling off and retracement, but that effect is not seen in that does not have any direct correlation, but some impact could be there. It's not seen in the currency pair USD INR, right? Which is not good for the economy, but dollar cooling off is it's not bad. But the bad thing is that the crude has risen up and it's gone to 114 point levels, and momentum has climbed into the bullish zones. This is not a lot good, and looks like it's going to the 13-year high, all-time highs once again, or 13-year highs once again at least, right, to the 120 plus kind of levels. Looks like that, right? And gold, it's somewhat green day, but it seems to be consolidating and seems to face a lot of resistance at the major resistance that is seen above from where it had slipped down, right? But sideways momentum is being maintained in the short term is what you can see in the gold. Remember, it had attempted to break out to make a new all-time high inches away, it failed, and then attempted once again and then slipped down, right? Even when the market was crashing, gold was not rising and was actually correcting at that time. Look at the global markets. This is something that you have to keep a close watch in the coming days. This information may change in tomorrow morning, so you'll have to watch the US markets tomorrow. So this is Dow Jones index that you're seeing. Look at the move, the big up move, correction, consistent 4 candles of up move has happened. Momentum has climbed and rising in the sideways zones. It has not climbed to the bullish zone. So same thing can be seen with the Nasdaq as well, right? Bullish candles and previous resistance zone from where it had slipped down seems to be well within that. Now we'll keep a close eye in the coming days. S&P 500 also sees a big up move and then close just below the previous resistance zone. So we'll have to keep a close watch whether this is going to continue like this, and then at least if it holds this support zone long period, it should be fine, right? As long as remember that it had gone to the bearish zones in the short term. So as long as that does not happen, it leaves the momentum be maintained in the sideways on all the 3 major indices, then it should be okay, because big moves from there either up or down. So look at, so it had a big move that happened in the all Nasdaq and all the indices last week, right? So now markets can't resist but move up, right? That's what happens when big moves happen in the US markets. We would move up obviously, but if it is a small move or a sideways move, then we may look out for other cues of markets, right? Two actionables, Mahindra and Mahindra long, and Reliance Industries also long. Both seems to be, so Mahindra and Mahindra is showing, auto sector itself is bullish in the short term. It's showing kind of a breakout, an all-time high is taken out today. Looks like cup and handle pattern, major resistance cleared. Now any close above the previous day's today's candle high could be able to swing opportunity with the stop loss at the neckline here. Momentum is bullish and trend also is bullish on the weekly, on the medium term. So the short term definitely it's bullish as well, both trend and momentum. Trades has to be taken on the lower time frame and less than 1 hour 15 minutes or daily. That's where the trade has to be taken. But any candle high breach from here would be bullish. That's Mahindra and Mahindra auto sector stock. Reliance Industries has corrected substantially and then climbed into the momentum is rising up, and then this is the weekly and daily. It's even more bullish. The candle also is a wide range bullish candle. You can clearly see that there's every likelihood that this breakout can continue, and at least it could go to the previous 2,900 zones. That much of swing long trade opportunities can come in. So Reliance Industries and Mahindra. So to wrap up, the mild bullishness that was there last Friday continues, and it's a mild bullishness only. I cannot confidently say that it's a moderate or big bullish view. I cannot do that. The markets just not, the charts just don't indicate that. But overall, if you see that it's a rising momentum that you see, the charts are showing that the momentum is rising, but still sideways, not a climb to the bullish zones. I mean, RSI 60 is still below that, so it is rising, but almost getting into the bullish zones, you can say. But the trend in the short term has already crossed over on both the indices, which is very positive. Bollinger Bands also clearly indicating that it's not going to expand further down. Instead, it is turned sideways, and then consolidation and contraction of the bands is what you see in the short term. So, a major gap resistance was clear, very nicely by both the indices today and yesterday, which is also positive. The Fyers have turned buyers, as we have seen, first time in a month, and VIX is cooled off below 20 after a long time. So all positive things that gives the further push to the bullish zones. So gap up, definitely the big gap up, and major gap resistance cleared. The gaps are very powerful. It's as a support and a resistance. So it's that gap ups are pro gaps. Pro gap is professional gap. So creation of a kicker gap up that happened in both indices is very positive. So overall bullishness is clearly evident from the charts, and so that's the reason for being bullish. Now the markets remember, it's still very close to a major support zone. We could clearly go up and then face some resistance and make another swing high, and then fall back to make a new swing low. That's possible, right? Because RBI rates hike has recently happened. Another rate hike could happen next month. US markets are facing historic inflation highs, and then Fed rate hikes will continuously come in. FAS not aggressively into buying mode yet. Crude is the first time they're buying something today after 1 month. Probably they may sell off 10 times that means in the coming days. So it's all possibilities are there. Crude price is 114 plus. It's heading high. Rupee at 77.5. It's weakened to the core. Like global cues are not great with the war still happening, and then COVID still not fully out. So uncertainty is still there, even when we say that it fixes cold off a little bit, right? So we have to be careful with the levels and the probabilities of going down and up is what we can do. So cut short your position size as long as the VIX is not cooling off and settling and heading downside. So as long as that consistency in that is not seen, it means uncertainty is there. Anytime it can mean root and go up. So let's keep a close watch, and then manage your risk, and by cutting short the position size and then putting stop losses and hedging properly for overnight positions is what we can do. So that's a view mind. So that's a view. Mild bullishness is the short-term view. Hope this helps you to frame your own view for the next day. If that helps you in some way, consider hitting the like button, put in your comments, and subscribe if you're not done, and share it to maximum. We have very few subscriptions. Appreciate your help in this regard. Thanks a lot. Happy trading. Happy learning. Thanks for watching. Bye.